watching our podcast, Real Estate Insider, where America goes for fun. I appreciate all of you guys tuning in and watching the channel with Angelo Christian tonight. Every week, we do our live talk with Angelo where we tune in, ask questions, go over the content, the information to get you real-time information, what's going on in real estate, the market, credits, interest rates. And we're a direct nationwide lender. We do commercial lending, residential, private lending. Give us a call or text my office. We're open 7 days a week. Hey, Kevin, good evening. Thank you so much for tuning in and watching the channel. 832-431-6331. Also, all the links are down below to get signed up for enrollment. There's no cost for enrollment. There's no hard credit check. There's no contract. You don't have to pay any fees to get started. And tonight we're talking about some of the new changes with Fannie Mae and Freddie Mac. I don't know if you guys recently saw, they're actually getting rid of the credit score requirement to be able to get a loan in 2026. So right now, for you to get a conventional loan, you have to have at least a 620 or higher middle credit score. So as of 2026, I don't know if you've seen Fannie Mae and Freddie Mac have announced this major update, huge news, guys. No more credit score requirement to get approved for a conventional loan. Now, you still have to get approved through underwriting, and you still have to get approved for the bank or for the lender that you're going through. But there's not going to be a credit score requirement per se. Now, I don't know, like, as far as what does that mean or what does that look like, as far as what other inputs or requirements are going to be needed. But you don't have to have a 620 or higher credit score, even though Fannie Mae and Freddie Mac say that it's a 620 or higher. I will tell you from personal experience that 90% of the loans that get approved with Fannie Mae and Freddie Mac are really about 680 or higher. In fact, even 700. So it's going to be very interesting to see how are these loans going to get approved if there's no credit score requirement. Are you going to have to put a bigger down payment? Like, for example, with private loans, they're asset-based loans, and they're not based on the credit, but you have to put more money down. They start with 10% down. So, I mean, the thing is that there has to still be some type of risk analysis. And of course, they use credit as the ability to repay, which I don't agree with 100%. But that credit score is something that's looked at. So the question is, this algorithm. So what happens is when you apply for a loan, the loan officer pulls your credit. They look at your income, they look at your assets, and they determine based on the matrix what program that you qualify for. And they take the middle of your three credit scores, your Equifax, your TransUnion, your Experian, and they determine, based on what your middle score is, what program you're actually going to be eligible for. Like FHA goes down to a 500, conventional currently down to a 620. Then they submit your application through something called the Automated Underwriting System, AUS, Desktop Underwriter Loan Prospector. And that algorithm, that software will determine if you get approved for the loan or not. Okay. So right now it's programmed, the inputs, the programming for conventional is that you have to have a 620 or higher credit score. Now, when we go into January of 2026, they remove that. There has to be some type of risk offset because obviously if there's a bunch of loans going to default, the government's not going to put up with that. So even though that they say they're getting rid of the credit score requirement, there will be adjustments in other areas. Either you have to have significant assets, like an asset-based loan, or you're pledging assets, or you're putting more money down. It's not going to be where there's no credit, you have zero credit, and you're getting 100% finance. I can promise you that is not going to happen because it just doesn't, the credit markets don't work like that. They learned through the subprime crash that they can't do no income, no assets, and 100% financing. So now if you got significant assets, you got a couple million in the bank, and you got no credit, they'll probably make a loan to you. Or you got a bunch of rental properties that you can pledge, they'll probably make a loan to you. But if you're in a situation where you don't have any income, you have no credit, no job, I don't think you're going to get approved to buy a house. I just don't see it happening. So even despite the headline saying that it's no credit score, I still think that you have to read between the lines and just think about the practicality of it, because they still have to document the ability to repay, and if they can't do that in some way, then it's just I don't see how it's going to work. Now, it could be a situation where you might have a really good job, make a good income, and you have extenuating circumstances. That's the one problem that I don't like with conventional underwriting is there is no manual underwriting, meaning that they can't look, take a letter. Let's say you went through a divorce and your credit got really messed up. Um, they don't. The system doesn't recognize that. The software doesn't care. Like a non-QM loan or DSCR loan or private loan, it's manual underwriting. There is no software that's determining the approval. So let's say you had a medical emergency, a life-threatening situation that affected your credit, you lost your job, then they can see that, read between the lines based on what happened. But a conventional loan, they can't do that because the software doesn't scan for that. It just says, oh, your credit score is down, or you miss payments, and then therefore you're not going to be eligible for the loan. So I still think that maybe if they can change that or modify that, or maybe there'll be, I think what would be good is if they added manual underwriting to conventional. I think that would be good. Now, I don't know if that'll ever happen. They used to have something called expanded approval with conventional loans where they could do manual underwriting. And to me, it made a lot of sense because there's so many people in different situations with extenuating circumstances where a automated approval is not going to be possible. So, but to me, it's not really a big deal because my thought is the future of lending is in private lending, um, bridge lending, hard money lending, DSCR, non-QM, manual underwriting type loans, and that conventional is going to end up just kind of withering away. It's not going to go away, but the market share is definitely going to erode because there's a lot of situations where the financing just doesn't make sense for that type of for many people. Like if you have multiple jobs, you get paid through different pay structures, whether it's 1099, W-2, bank statement, Zelle, Cash App, Venmo. Maybe you just started a second job. You can't. None of this is eligible for a conventional loan, and you have to have 2 years of consistent employment income history. You couldn't just take on a job, your own business, being self-employed for less than 2 years on a conventional loan. So there's a lot of situations where I think that where the private non-QM lending shines really well, and it will continue to gain power as we move into the future, especially as interest rates come down. They're almost one-to-one correspondent relationship with non-QM private loans and conventional loans. The correlation is very close, about 80%. So I think as we move into the future, what we're seeing is more and more market shares increasing for private lending, and conventional lending is eroding. And so now I think that's why um, Fannie Mae and Freddie Mac have announced this and come out with this idea of getting rid of the credit score requirement because they realize that it really doesn't make sense, and that there are situations where you should do manual type underwriting, or life happens and you don't fit into the box. Doesn't mean you don't deserve or you shouldn't be eligible for a loan. So, but it is a new thing that's coming out. I hope that it helps a lot of people. That's our hope, and our mission here is to help as many people as we can with the financing. So if we can help you, we're a nationwide direct lender. We do commercial lending, residential, private, hard money lending, bridge lending. Nationwide, we do asset-based loans, construction, Fannie Mae, Freddie Mac, the SCR, lines of credit. So please reach out to us, 832-431-6331. All of our links are down below to get signed up. There's no cost for enrollment. There's no hard credit check. There's no points up front. The link should be down below. Also, for our real estate university, if you want more information on our real estate university, become a top producer, top closer, the links are down below for that as well. So check that out. Don't forget about our loan partner program. If you want to get signed up with us to get paid for your referrals for all your private commercial deals, reach out to us to get signed up to get approved for our loan partnership program. And lastly, don't forget about our Amazon royalty rewards program. If you're a customer, a vendor, a partner, you get your free Amazon gift card. You can go to Angelo Christian Mortgage on Google, leave us a 5-star happy review, and then you get your free Amazon gift card. Then send us an email that you left the review. So a lot of ways to benefit with our company. We've been actively doing it for over 20 years. So don't be a stranger. Reach out to our office if we can help. 832-431-6331, guys. It's where America goes for funding. Thank you so much for watching the channel with Angelo Christian. Take care. Peace out. Have a great